A moving average is one of the most important tools in technical analysis. It helps you figure out the overall market trend and can act as both support and resistance. But what if I told you there's a free trading view indicator that's 10 times more accurate than the standard moving average? Trust me, you've never seen anything like this before. In this step-by-step tutorial, I'll show you exactly how to use this indicator in the right way. And I'll also give you a complete trading strategy built around it that can help you lock in consistent profits. It's worth noting that this tool works across different markets, cryptocurrencies, stocks, futures, and forex pairs. The best time frames for it are 5 minutes, 15 minutes, 1 hour, and 4 hours. Now, let's get into how to install and use this moving average on your chart. First, log into TradingView and pull up any market you want. For this example, I'm using Ethereum on the 1 hour time frame. Head to the Indicators tab and search for Settlement Range EMA created by my favorite, choppy. Big shout out to them, by the way. It's totally free. The Settlement Range EMA gives you a dynamic look at market activity with a focus on stability and choppy price action. It highlights chop zones and helps you quickly adapt when the market moves outside those areas. One of its best features is that it stays consistent even during sideways markets. It filters out noise and shows you a much clearer picture of what's happening. The indicator divides the market into 3 phases: bullish, bearish, and consolidation. This makes spotting trends simple and also helps reduce losses when the market is stuck in a range. Unlike a normal moving average, the sentiment range MA uses more advanced calculations, which makes its signals much more accurate. When buyers are in control and price closes above the line, the moving average turns green, making it obvious that momentum is bullish. When that bullish momentum slows down and traders start taking profits, the market shifts into a consolidation phase. During this time, price often creates equal highs and lows, and that's a sign you should avoid trading. The indicator marks these areas in gray. As soon as sellers take over and price drops below the line, the moving average turns red. Inside the indicator settings, you can customize the moving average length and sensitivity. Personally, I like setting the length to 40. The purpose of the double filter is to smooth out the line, and I recommend adjusting the trigger smoothing to 5 instead of the default 4. You can also change the range multiplier, which affects how the moving average reacts to price movements. The higher the number, the less sensitive it becomes. For example, if you set it to 10, the indicator becomes much more precise at identifying market ranges, and you'll see how smooth the line looks. Another really handy feature of this indicator is multi-time frame analysis. If you scroll down in the settings, you'll see the option to check the higher time frame bias. Simply switch to a 4-hour or daily chart to get a clear big picture view. Now that you know how the indicator works, let's build a profitable strategy with it. Go back to the Indicators tab and search for Parabolic SAR with Algorithm and Alerts by Lonesome the Blue. Big shout out to them, by the way, as well. This one is very easy to read. It generates buy and sell signals based on market volatility. With the help of our special moving average, we'll be able to filter out most of the false signals. The general rule is straightforward: buy in an uptrend, sell in a downtrend, and ignore the signals during a range. These 2 indicators alone can already help you trade profitably, but we're going to increase the odds of success even more. Let's add the third tool. But fear not, make sure to watch the entire tutorial until the end, because I will show you different approaches to use more than just 2 indicators on the free plan of TradingView, all for free. Now, let's add multi-time frame supply and demand zones by this amazing author. This script is fairly new. The truth is, no trading strategy is complete without supply and demand concepts. You can't blindly rely on a buy and sell indicator alone, even if they're strong. Combining indicators with advanced price action techniques like supply and demand can significantly improve your trading decisions. Before using it, let's customize the settings. The script lets you select 2 time frames. But for this strategy, disable the second one to keep your chart clean. In the first time frame setting, enable the 2-hour chart. If you're trading lower time frames like 5 or 15 minutes, I suggest using the 1-hour chart instead for supply and demand zones. Once you've finished making these changes, click OK. Now that the setup is ready, let's go over the rules for taking trades. The strategy is simple enough that even beginners can use it effectively, but you do need to pay close attention to the conditions. Let's start with the long trade. First, you need to confirm that the market is in an uptrend. That's the case when price is above the settlement range EMA and the line is green. Make sure the moving average you're looking at is at least 2 time frames higher than your entry chart. This ensures the overall bias is strong. If the trend is bullish, wait for a buy alert. But there's one more key rule. Only enter near a demand zone. Never buy at a supply zone, because that's where most traders are selling. Following this simple rule will save you a lot of money. Once you're ready, set your stop loss just below the parabolic SAR dots and aim for a target at least twice the size of your risk. You can even use supply zones as your target levels for taking profit. Now, for short trades, the rules are basically the opposite. First, confirm that the market is bearish. Let's say the 4-hour moving average shows a bearish trend. That means the odds are already in your favor since you're following the trend. Now, wait for a sell alert from the parabolic SAR. To confirm the setup, check if price is near a supply zone. Never sell if the price is close to a demand zone. Place your stop loss just above the parabolic SAR dots, and once again, aim for a profit target at least double your risk. Traders, I hope this walkthrough helps you fully understand the strategy. If you have any ideas, feedbacks, or interesting indicators you'd like me to cover, let me know in the comments below. And as I'm a man of my word, make sure to check the recommended videos on your screen to learn different approaches to use just more than 2 indicators on the free plan of TradingView, plus the other playlist and video which I highly recommend to watch if you want to know how to turn any trading strategy into a bot with alerts so it does the job for you while you're not around 24/7, all for free, and it works with any trading strategy including this one, plus more. Just check them out, you will thank me later. And remember, always backtest this or any other strategy you learn here on Income Nomad. Thanks for watching and I'll see you in the next one.